Hello, SS2 commerce students. You are welcome to class. In today's lesson, we are going to be treating the stock exchange market. By the end of the lesson, you should be able to define the stock exchange market. You should be able to state the functions of the stock exchange market. You should be able to explain the types of securities traded in the stock exchange market. You should be able to explain the speculators on the floor of the stock exchange market, and you should be able to explain the members of the stock exchange market. So let's go. The stock exchange market refers to a market in which shares, bonds, securities are being traded. It is a market in which shares, stock, debentures, bonds are being traded. Basically, you can refer to it as a market in which existing securities are being traded. What are the functions of the stock exchange market? One, it helps in mobilizing funds. It helps in mobilizing funds for investment purposes. That is, you can get funds from the stock exchange market as a businessman to invest. Two, sale of securities. It helps in the purchase and sale of securities. Three, financial market for investment. So it helps basically for individuals that want to invest their money, that have surplus money. You can invest in the stock exchange market because the value of your shares can appreciate over time. Four, it facilitates the transfer of shares. The stock exchange market helps to transfer shares from one person to another. um, Five, it provides an avenue for government to raise funds for their capital expenditure. If government wants to engage in the construction of roads, for instance, they can access the stock exchange market by issuing their bonds, their treasury bills, treasury certificates, and also um, they can also issue their bonds, government bonds, basically government bonds, treasury bills, treasury certificates. Then six, it helps in the valuation of prices of securities. The stock exchange market helps to value the prices of securities. Now, how does a stock exchange market, how does it function? So organizational setup of the stock exchange market. Now, the stock exchange market is a highly organized market in which only members of the market are allowed to trade, and the members of the stock exchange market are the jobber, the broker, the authorized clerk, and the unauthorized clerk. For exchange to occur, the jobber, on acting on behalf of his client, will approach sorry the broker, acting on behalf of his client, will approach the jobber. And when he approaches jobber to buy securities on behalf of his client. Later, the jobber will quote two prices for him: the buying price and the selling price. The selling price is higher than the buying price, and the difference between the two of them is the jobber's turn. The broker now prepares two documents. The broker will prepare the contract form, and he will also prepare the transfer form. The contract form is a form that is handed over to the client of the broker to signify interest in either buying or selling of shares. The contents include the purchase of shares, brokerage commission, date of payment of the security that is about to be bought or sold, and stamp duty. Then the second form that will be prepared by the broker is the transfer form, and that is prepared basically after payment of the shares, and the document will be prepared in order for the transfer of shares from the jobber to the broker, that is the client of the broker. Now let's look at the members on the floor of the stock exchange market. We have four basic members of the floor of the stock exchange market. One, you have the broker. The broker is is an agent that works on behalf of his client to transact business with the jobber. Now, the broker earns a commission that is called brokerage for his services. So number two is the jobber. The jobber is the actual dealer in the stock exchange market. He specializes in the purchase and sale of a particular security. Now, he quotes two prices, as I said earlier on, the buying price and the selling price. The selling price is higher, and the difference between the selling price and the buying price is his own profit, called the jobber stone. You have the unauthorized clerk. The unauthorized clerk is referred to as an agent of the broker that is not allowed to act on behalf of the broker in the stock exchange market. Is only like a clerk. He does not work for the broker in the stock exchange market. Two is the next one is the authorized clerk. The authorized clerk is a worker of the broker or an employee of the broker that is allowed to transact business for the broker on the floor of the stock exchange market. I've explained the procedures for exchange in for the procedures of transaction in the stock exchange market. Now, you must understand that when shares are actually sold, it is either the client is able to receive dividends on the next accounting period or is unable to receive. If he is able to receive, the shares is quoted what we call a cum div, that is, it is allowed with dividends. So he is allowed to receive dividends in the next accounting period on the shares that he has bought. But if it is quoted ex div, that is without dividends, that means that he is not allowed to receive dividends when he has bought the shares during the next accounting period. Now the last one, the one before the last is speculators on the floor of the stock exchange market. Speculators are people that actually predict and transact business on the floor of the exchange market. We have three speculators. One, you have the bull. The bull is a person that buys shares with the expectation that the price of the shares will rise in the future so that he can sell at a profit. The bull is a person that buys shares with the expectation that the price will rise in the future so that he can sell at a profit. The second person is a bear. A bear is a speculator on the floor of the stock exchange market that buys shares with the expectation that the price will fall before the delivery date. If the price falls before the delivery date, he can actually gain profit by actually buying more shares. So whether the price falls, you can make profit. Whether the price rises, you can also make profit. Then the last person is the stag. The stag is a speculator on the floor of the stock exchange market that actually buys only new securities. Having said that, we look at the types of securities that are actually traded in the stock exchange market. What's a security? A security is basically a loan or a debt instrument that is traded in a capital market. Remember that you remember that the stock exchange market is a part of the capital market. So securities refers to loan or debt instruments that are traded. Types of securities. Number one, you have shares. What is shares? Shares is an individual's portion of ownership in a business that entitles him to profit that comes out of a business or that is gained in a business. Stock is a bundle of shares. When you have a large bundle of shares, then what we are talking about is a stock. The next one is the debenture. Debenture is referred to as an acknowledgement of debt issued by a company under a seal that promises to pay back its debt at a future date with an interest. So it is an acknowledgement of debt by a company, and it is used to acquire loans for short-term basis, basically. So the next one is bonds. Bonds is basically issued by either private companies or the government, and it's used to get loans on a long-term basis. And the least maturity date for a bond is actually 2 years. Then you have gilt edge. Gilt edge security is a form of debt instrument that is given out by private companies, especially big multinational private companies, to acquire loans. Now, we've talked about the functions of the stock exchange market. Lastly, we look at the importance. One, it creates an avenue for raising money. With the use of the stock exchange market, you can raise money for investment. Two, it provides employment opportunity. People that are engaged in the stock exchange market are gainfully employed. Then it provides information for investors. People that intend to invest through the stock exchange market, they can get the necessary information that they need. Then it helps to distribute or transfer investment. It helps in the distribution of income basically, and it helps in generating investment opportunity. Then lastly, it is a means of measuring the performance of a company in a year. By companies quoting the prices of their shares, you can know how well a company is actually faring in the market. So that is the end of our lesson for today. If you have questions, please post in the question and answer section, and have a nice day.